All right, then let's dive right into it. The key insights from North American sports tech. And as always, like I said, it's very data driven because we like facts and figures, the tangible things, and not too many buzzwords. This chart here shows you how much money went into North American sports tech over the last 5 years. And this is the green bars. And just that you know, on the 2020 bar, you see this little dotted line on top. This is because we always add some sort of reporting lag to the numbers that we found, because typically there's still some new investment information coming in or trickling in a little bit later. So and yeah, second information on that slide is that line that you see, the blue grayish line, a bit lower. This shows you the number of investment rounds that actually have happened in North American sports tech over that time. Let's speak about the numbers. We have spoken about Asia Pacific this morning. We have spoken about Europe around lunch, our lunch time, like I said. And what both geographies had in common is that they took a massive hit in 2020 in terms of investment because of the pandemic. And when we looked at this chart here, we were like, wait a second, what actually happened there? So it seems like if you include the reporting lag that we expect to come in, that last year, 2020, even though there was the pandemic, it was the most successful year in North American sports tech in its history. Isn't that crazy? And I'll walk you through what actually happened throughout that year. Yeah, and before I do this, just when it comes to the deals in that year, it was actually the lowest number compared to the 4 years before, which also led to the fact that the average ticket size went up quite much. So the average ticket size was $16.5 million US, which is slightly below the one that we've seen in Asia Pacific sports tech, where we typically only have a bunch of big deals and not so many small ones. So North America was closing that gap, and investors were writing some big checks there. Very, very interesting development. What else happened? Yeah, the year 2020 actually started really, really strong with a January that accounted for over $500 million US in investment, and everybody was like, okay, this is going to be a crazy year. We're going to break all records. And then the pandemic obviously hit, and the next couple of months have been really slow, not much investment, investors being really, really careful, which was understandable. And then late summer in September, investors starting to open their wallets again. And September alone, I think, accounted for $570 million US of investment. And yeah, then some more investment came in, which ultimately leads to the situation that we have here. Also interesting to see is that in 2021, that trend continued. We have seen massive investment rounds, especially in fitness. Think about Tempo and Tonal and a bunch of other companies already announcing big rounds this year. So we are at the moment positive, if nothing crazy happens, if that trend continues, that we see another very, very intense year with lots of investment and potentially, as it looks, another record year. One additional thing to mention here is we talk about the North American sports tech ecosystem, but if you look at where the money is actually coming from, you will see that 97% of the investment that we're showing you on this page is actually coming from the US. So the USA is accounting for 97% of the total investment in North America, which shows how important and how strong the ecosystem is there. What we also like to do is we don't just look at the region as is, but we also like to go one level deeper. We don't look at the countries, like I said, with 97% of investment coming from the US, it would not be so interesting to do so. So we decided to go to have a look by state, and that includes every country in North America. On the left side, you see the top states in North America by funding over the last 5 years, and on the right side, you see the top states in funding just in 2020. And one thing is super obvious if you compare both charts. it is having a big three in North America. So New York, California, and Massachusetts are clearly the three leading states. And even more interesting, it gets when you look at the numbers behind. So let's start with the left side over the last 5 years. New York, definitely both state-wise and also city-wise, the sports tech capital of the world, raised 3.5 billion US dollar of investment over the last 5 years. On rank number 2, it's California with a couple hundred million euro behind. And then, as you can clearly see, there's a massive gap to Massachusetts, which has, let's say, roughly a fifth of what California has been raising. And below that, the numbers get really, really small. One interesting thing to highlight is that Ontario is the only Canadian state that has made it into the top 10, actually. Looking on the right side, however, we see 2-3 interesting facts and figures there. First of all, we have seen that California has had a really strong year of 2020, accounting for 1.1 billion US dollar of funding, which is twice as much as New York. So it seems like, if that trend would continue, that California is about to take over New York potentially as the leading region sports tech wise in the world. So very interesting development. The second interesting development is also, if you look at the column on the very right, the share of top deals. You see, and that is something, by the way, very typical for a yearly view. You will have a high volatility year over year. For example, Ontario has the top deal, the top startup in Ontario accounts for 96% of the funding in 2020. Even more extreme it gets with Tennessee, where it's one company, and that one company's deal was the one that accounted for 100% of Tennessee's funding in 2020. This is also, by the way, why Tennessee went up 27 positions compared to 2019. So first interesting thing is that California got way more investment than New York. That's an interesting trend. And then the share of top deals is a very volatile thing. And California and also some other states, they are doing much better when it comes to the distribution of funding. So also in that aspect, California seems to be a very good ecosystem where a bunch of companies are actually contributing to the total amount of funding, very, very healthy. And as I said before, Ontario, the only Canadian state in the top 10 list again, and last year on position number 4. So that is a strong development. And as always, we have to see if that development continues into the next year. So maybe Ontario is developing into, let's say, a proper sports tech region. That is the most important information for this slide. Now it's poll time. As Ron said, we are asking, or like to ask you, a few things here and there, and I'm gonna start the poll because now we are gonna, and the poll should be live now, we are gonna speak about cities. We're moving from North America as a region to the states that we have seen, and now we're coming to the city level. And I would like to know from you, how many Canadian cities do you think were in the top 10 sports tech funding list of 2020? Is it none? Is it 1? Is it 2? Is it 3? What do you think? I'm going to give you a few more seconds. It's a head-to-head race. All right. Some votes trickling in. Okay, so yeah, you said 1, or 55% of you said it is 1 city that made it into the top 10 of 2020. Let's look onto this slide. And you are right. The cities by funding in 2020 list shows that only Toronto made it to that list. What else is interesting to see? Again, on the left side, we have the last 5 years. On the right side, we have the year of 2020. If you look at the cities by funding, you again see that New York City is leading. And remember, on the previous side, The state of New York was just a couple hundred million in front of California as a state. Now the gap is much bigger, with New York City like almost 3 times, 2.5, 3 times as much as San Francisco, who's ranking on number 2. And then again, it's Massachusetts, Boston, who basically got all the investment that went into startups in sports tech in Massachusetts. And then there's a bunch of other cities like Long Beach, Los Angeles, Santa Monica, a bit further down, which shows that the California ecosystem is, like I said before, really diverse. While in the state of New York, it's only New York City, not surprising, I guess. In California, the situation is a bit different because we have a bunch of different hubs and cities contributing to the overall funding of the state. Really, really interesting. And on the right side, again, high volatility, lots of cities depending on one startup. For example, in Long Beach, we had Swift, who raised 450 million this year. In Boston, we had Whoop accounting for 96% of the investment. And in Toronto, who, like I said, had a strong year, it was the Score, the content platform, who accounted for, I'd say, almost all the investment of last year. 2 more interesting things is that Los Angeles was actually on rank number 3 for number of deals in the last 5 years, which is a strong positioning, but they have not been successful in climbing up the ladders based on that. So even though they have lots of deals, the total amount of funding was not as big as, for example, the one of Boston or something. And we always speak about Canadian cities, Canadian states, American cities, American states. Just for your information, Mexico City, which is the first non-Canadian, non-US city, ranks on position number 142 when it comes to investment in 2020. Another indicator that the countries outside or besides the US and Canada have some room for improvement, let's put it that way, and that the local ecosystems in sports tech are not so developed yet. Let's move on to the next slide. We are done with geographies for now, so no more states, no cities. Now we're talking about the sectors in sports tech, and you might know our sports tech framework that we have been developing since 2017, and we keep improving it, as we like to think. We have 3 different sectors in sports tech. You see that on the left side in that circle. We have solutions for athletes, so everybody who is doing sports, working out, and as we always say, based on the quote of Bill Bowerman, Nike founder, everybody who has a body is an athlete. So it's not just the pro athletes, it's also the recreational athletes. That is sector number 1. Sector number 2 is for fans. So it's the consumer of sport. And that can be in the stadium, on your mobile phone, on the go, in a bar, at home, or I don't know, wherever you're consuming sports, that would be included there. And sector number 3 is sports tech solutions for executives. So the guys and ladies out there who are managing clubs, teams, leagues, gyms, stadiums, whatever. And this is typically a B2B business space. So these are the 3 sectors. And as you can see, the sector for athletes, so people who are working out, was clearly the strongest one, accounting for almost half the investment over the last 5 years. If we move to the right side, we keep that structure up, so the colors are matching. And again, we have the 3 areas for athletes, for fans, for executives. But on that level, the subsector level, we have a bit more information of where the investment actually went into. We also have a 3rd layer, but it will complicate things too much, so we're sticking to the subsectors here. First of all, before we have a look at those 3, what we have to say is that for activity hardware, so the devices that let you work out, for example, Peloton, Tempo, Tonal, all those, was by far the biggest subsector over the last 5 years and accounted for 30% of the overall funding, like I said, in the last 5 years. And even more in 2020, where it was 37%. All of that, of course, fostered by the COVID development, where everybody was looking to find a solution to work out at home while gyms were closed, obviously. If we look at the three circles there, we will see that there's always one subsector that is dominating. For athletes, that would be hardware-based solutions for the activity. For fans, these are the content platforms. Also, I think obvious because in times of COVID, they got another push. Ron will talk about it a bit more later. And in the for executive segment, we had the media and sponsor management subsector being the dominant one. Also makes sense because if lots of content is consumed, that content also needs to be created and to be distributed to meet the rising demand. That is, I think, all we need to know about this slide. Just for your information, the logos that you see on there are the companies that have raised the most amount of funding in the last 5 years in that respective subsector. Like I said, all the slides are in the North American SportsTech report that you can download for free on our website. Next slide. Now we are talking about the companies that actually led to all that investment that I've been talking about for the last, 20 minutes probably. On the left side, we see the all-time leaders, and on the right side, we see the top companies in 2020 by funding in North American SportsTech. Let's start on the left side. Without looking at the companies at all, who that is, let's first focus on those colors that you see there, because here we continue that framework structure. Maybe you remember and you see that legend there. Purple is for athletes, blue is for fans, and green is for executives. On the entire slide, there's only one company that is in the executive segment, which is BAMTech Media, which has been acquired many years ago, for $1 billion US. And yeah, this is the only one that we've seen. All the other companies out there in the top ranks are either for athletes or for fans. Another sign of how important actually those sectors are. Going a bit deeper, so what was invested in and what was interesting actually there. So first of all, in the top 10 list overall, Whoop and Tonal are the two new entrants. All the other 8 have been the same as in the last year. So Whoop and Tonal, you're going to see that on the right side as well, have raised big investment rounds, which pushed them into the top 10 all-time list. The other interesting thing is that from the companies that you see on the left side, there are many that won't raise any money anymore. Like I said, BAMTech got acquired, FanDuel the same. Then we have seen IPOs of Peloton and DraftKings, even though Peloton, by the way, I think announced last week or so that they're raising some post-IPO money, but they will not raise any money in the classic sense anymore. And out of the 6 remaining companies, 5 are actually in fitness. So, and as we know, there's lots of investment going into fitness these days, lots of big rounds this year. We expect the fitness company to almost completely take over that ranking further down the road. Some of them will, of course, also IPO, especially with all the SPAC madness that is going on. Ron will elaborate on that a bit more. But yeah, fitness, I wouldn't say is eating the world, but is taking over a lot of it, and especially the sports tech world. The other company, or the only one remaining that is not a fitness company, is Discord, by the way. And I don't know if you've seen the news, I think yesterday or 2 days ago, Discord, there were rumors that Microsoft would actually acquire them for $10 billion US. That was a rumor for quite a while. That did not work out for whatever reasons. And then the news came this week. And just one thing to add, the plan was obviously to integrate Discord with the Xbox, which is a powerful combination because Discord is mostly so far used by gamers. But the news broke, like I said, yesterday or 2 days ago, that now Sony is investing in Discord and is planning to integrate the Discord chat into the PlayStation offering. So there's an interesting little battle going on there that we're following, like I said, with interest. And that pattern of fitness companies dominating the rankings is the same on the right side, where actually 7 of the 10 companies there who raised the most amount of investment are fitness tech companies. And if we look at the big rounds this year, I said it a couple of times already, Tempo, Tonal, also recently Ergada, the smart rowing machine, the investors are pouring money into the fitness tech space. Seems to be a very hot area. Ron is, I think, gonna speak about that topic as well. These are the 5 data slides. I have one more slide for you, and that is actually again connected to a poll. I'm gonna publish that one quickly. I'm going to show you a slide of the North American sports tech ecosystem that consists of investors, accelerator incubator programs, and initiatives. And I would like to ask you to take a guess. How many sports tech investors do you think are in the North American ecosystem? And I'm not talking about single investors like business angels, and I'm also not talking about investors who typically invest in other areas and also do a sports tech investment here and there. I'm talking about investors which are either funds or networks that are dedicated to sports or explicitly say that they invest in sports. So what is your guess there? I give you a little bit of time. All right, votes trickling in. Is it 5, 15, 25, 35? All right, 50%, half of the votes went to 25. Oh, it's some last minute change. Anybody still needs to vote? 25 is down to, now it's back up. Okay, 50% of you voted for 25. And as much as I dislike to say it, but you're again right. I'm always hoping for some surprises here or being able to surprise you. If you look at the North American sports tech ecosystem, by the way, this looks completely different than the one in Europe and in Asia. I'm coming back to that in a second. We see that there are actually 25 investors that say, hey, we are focused on sports and fitness in some way. I'm not going to walk you through all of them. Again, you can look them up. In our report, we have a little description. We're linking to their websites. If a bunch of them also gave us their quotes on what are the current trends in sports tech. So as we like to think, an interesting read. So a lot of investors in North American sports tech, which also explains why so much money is going into that space. And if you look at the right side, programs and initiatives, there are a few here and there, by the way, good ones that we have to say, but just by the sheer numbers, it's not much. And let's compare that to Asia Pacific. Asia Pacific is still sort of young when it comes to building an ecosystem, even though lots of money goes into the area, but they hardly have any investors, programs, initiatives focused on sports. It's, I don't know, I think we had like 12 or so, like a little bit above 10. And if you look to Europe, it's another extreme, because we see a lot of innovation initiatives actually in Europe, and a lot of incubators. I think now we have 13 and I don't know, I think over or around 30 initiatives. So on the right side, very heavy in Europe, but Europe is lacking of sports dedicated investors. I think we only had 8 or so, and none of them are like really big funds like the ones that you see on this slide here. So quite some differences when you look at those ecosystems.